everybody doing? Good? Well, thank you so much for having us again this year. I would be remiss not to thank Urbana and the team, Caldwell Securities, for everything they've done for us over the years. Also really great to see a full room, so I really like this morning. Great job on setting up the event. My presentation is going to talk about some key themes and trends in digital assets. I know there was some comments around crypto and price action, although look at your screens this morning, we're doing pretty good this morning. But generally, I wanted to start with a little bit of macro here. 2025 has been a transformative year, or was a transformative year for digital assets. What you'll notice on the board here are some of the largest financial institutions, asset managers, transactional companies, banks, merchants in the world that have all made either public statements or investments or launched products in digital assets in 2025. And the list has continued to go on. I mean, you've seen NASDAQ, NYSE make comments in the last few months. Launching, you've seen DTCC, so the clearing, infrastructure provider in the U.S. Yesterday, you had another, large announcement out of Swift Network talking about setting up blockchain technology to improve their system or modernize their system in partnership with BNY Mellon. So really, what is happening? The largest institutions in the world are telling you that digital assets are here to transform market structure. They're here to transform the technology, and the pipes of the financial systems as we know them today are changing. Now, why does this matter? Because Tetra has been in the middle of this since 2019, since our inception. So Tetra was built essentially to solve a problem, which was to custody digital assets here in Canada. There's a large failure, for those that are not familiar, in Canada, where a founder left with about 200 million of crypto. The exchange was called, or the crypto trading platform, Richard, was called Quadriga CX. And as such, we decided, the folks at Tetra, that we would need qualified custody in Canada. Why does that matter? I mean, we're talking about sovereignty now. In the papers, we're talking about, our partners, how they're acting with us, and how Canada needs to be more sovereign and defend itself. Well, digital asset sovereignty is an important topic, and Tetra has been a pioneer since 2019 and converting into a license in 2021 in getting digital assets on our Canadian soil. I mean, fun fact here is that about 80% of the assets are still sitting in the US for Canadians, and that's a huge problem. So we started with Tetra Trust in 2019. But the reason we put this graph here today is Tetra has evolved quite significantly in the last, 18 months. What do I mean by evolve? We essentially started to branch out in other services that we saw as value add to the entire company, but also created a portfolio of offering for our clients. And we'll dig into some of that a little bit deeper in the presentation. So 2025 was an incredibly transformative year. We launched Tetra Unity, which is a software provider that helps institutions get into crypto. This has been a really great product for financial institutions in Canada specifically. We're working with some of the big 5 banks, some of the large credit unions, essentially in terms of their access into the crypto market, providing the backbone for that technology. And then we'll speak more specifically around stablecoin opportunity as well, but announced a huge stablecoin project as well last year. So a few years ago, or the last couple of years, you would have heard me talk about custody and how custody is the backbone of digital assets and why it's important to Canada. Now we're talking about institutional grade offering across all of digital assets infrastructure, and how Tetra is helping evolve market structure in Canada. A little bit about our stats. I'd be remiss not to mention some of our growth over the last, we took 3 years as a snapshot. So, we're growing roughly 40% per annum. On the client side, our asset custody are growing about 80% per annum. on the trust side of our business, on the qualified custody, and then our revenue have grown 130% per annum in the last 3 years. So we are showing steady, great growth numbers over the last few years that are compounding, in our success. Now, want to speak a little bit about the transaction that was announced in September for Tetra, but specifically the creation of CAD Digital. So CAD Digital is an entity that we created in 2025. The deal was announced in September in partnership with some large financial institutions and players in Canada to launch a stablecoin for Canada. It's really important for us to have a competitive product as a country into the marketplace. And today, unfortunately, the products that are available just don't meet the requirements of what global markets and the Canadian players want to see. So a group of portfolio companies and Tetra got together, and you see some of those names there. So Purpose, Shopify, ShakePay, TB, Wealthsimple, National Bank, and essentially help create this entity, which Tetra, at the holding company, controls the majority of, with the intent of launching a stablecoin for Canadians. We have been working very hard and arduously on this project, and what was really incredible to see is a few weeks after an announcement, the budget came out, the Bill C-15, and in the budget there was a Stablecoin Act, which essentially highlighted our government's intent to accelerate this space for Canadians. Specifically, our Prime Minister believes that having a sovereign stablecoin is incredibly important and a competitive tool globally, and he's pushing finance to get this done. I mean, this is one of their top 3 priorities at the federal government right now, is to get the Stablecoin Act in place. Tetra has been advising significantly on the bill. We've provided papers. Some of our papers have been read in terms of the readings in the House of Commons. So we continue the strong advocacy as to what we want to see. And our brand recognition, and as well as this token, has essentially led us to bring additional partners to the table. So you'll see at the bottom of this slide, companies like Float, Aquanow, Coho, Wealth One, Sling Money, Cybrid, so some of the challenger banks, top fintechs in the country, some of the large market structure players in digital assets as well, are essentially getting behind us. And I think we ran out of slide space, but we could have put another at least 10 to 15 partners. People are very excited about what we're doing, and so are we. So our intent is to be live in Q1. We're working very aggressively with our primary regulator. We are meeting with them every single week right now, and you will have a truly sovereign Canadian stablecoin out before the end of Q1, and we're quite excited about this. It's brought an enormous amount of attention to the company. And it's been, I would say, probably a double-edged sword, because on the one side is most companies benefit from being able to build products in stealth mode and then take them out to market and hopefully blow up and get the attention. Tetra's been in an opposite position. We've been getting a ton of attention on our product suite and our positioning into the marketplace, but the product still needs to come out. So there's a lot of excitement within the organization, but there's also a lot of eyes on us, which is very beneficial to the name and the portfolio. Now, given the audience, I thought I'd do a little bit of a deep dive into stablecoins as well and why this really matters. Stablecoins are not, let me reframe. They are crypto, but you should think about them differently than crypto. We're not talking about Bitcoin. We're not talking about Ethereum. We're not talking about Solana, which are essentially blockchains, right? You're talking about a digital representation of a dollar, whether it be a Canadian dollar, a US dollar, an Australian dollar, right? And it really bridges the traditional concept of currency, which is, monetary policy backed by a sovereign government, with digital asset technology to create a new instrument that allows you to transact very, very efficiently. So what do we mean by that? A typical stablecoin transaction, depending on the blockchain you're doing it on, is now under 1 cent, 1 second. You can send money anywhere in the world using stablecoins, and it's really, really disrupting the entire remittance market, the payments infrastructure markets, how people think about their treasury, and that's why there's so many players that are coming into this market. But it's important that, or I encourage you to think about this as different than crypto. It's a different set of tools, but it's built on blockchain rails. Stablecoins are everywhere. Again, we've mentioned this at the beginning. Some of the market structure changes that you've seen are some of the players that are coming in. 100% of them are coming into the stablecoin space. It's just a better tool than what we currently have today. There's a reason why Swift is trying to get into the space now, or trying to essentially join the race. Their system is just not competitive anymore. So there's incredible evolution that's happening in this space at the moment. It's a very exciting thing to be part of. And I'd be remiss if I wouldn't talk again about the changes in the regulatory environment that have provided clarity. So we talked a little bit about Canada, why Canada is trying to position itself competitively, and why the Stablecoin Act and C-15 is important. But really, there's been other drivers globally of this. I would say every G7 country now has a stablecoin framework. The US, through their Genius bill as well, has created frameworks for companies to launch and essentially operate in the stablecoin space. So we need to be more competitive in Canada, but the regulatory angle is really what's driving this adoption, this excitement. And then finally, before we go to questions, I wanted to show some slides that I think are really important. So transactional volumes, right? You are now seeing trillions of dollars being transacted on a monthly basis. Still relatively slow amount, but you can see the exponential growth that started in 2014 and accelerating in 2015. I think the slide I want to leave you, or the graph I want to leave you the most with right now is number 2, which is the line is essentially stablecoin transaction volume. The bar charts are price action in crypto. Stable coins are not linked to what the crypto markets are doing. Doesn't matter if Bitcoin is down 30% year to date. The reality is stablecoin transactions continue to accelerate because there's more and more adoption. And you see that through through chart 3, which essentially shows you that stablecoin has now more volume than Visa. In terms of dollar transacted, and we're chasing ACHs pretty aggressively. The U.S. rails for transfer of fiat or of USD. Good question. I know I would not put the acronym. I don't know what ACH stands for, Charlie. Sorry. And then finally, the fourth chart, which, say what you want around, the person operating south of the border, but they have recognized that enabling stable coins essentially is good for the country because people build reserves in that currency. And this is why Canada should care about this, because our stable coin is 1-for-1 backed. Therefore, we are investing dollars in Canada back into Canadian bonds, GICs, et cetera, and that's good for our country. So I will go to questions, but before I go to questions, and I don't want to take anything, I don't even know if Jordan and Max are going to talk about this, but part of the reason why we're really excited is also because of the agentic commerce aspect of stablecoins. There's been obviously comments from the chairman this morning around AI, and we've talked about AI even during Richard's presentation. But the backbone of commerce that is changing through this technology is going to need transactional dollars. They need internet money, and that money is stable coins. So that is growing very rapidly. It's still relatively small. It's a little bit futuristic when you think about how agents will transact for you. But this is where people get really excited in this space, is that these dollars are programmable, which means you can automate them, which means that when you have companies and programs and agents that are talking together, they need something that works, and our current system does not work. So if you want to learn more about this, their Visa recent quarter transcript talks about this. The MasterCard recent quarter talks about this. The Stripe annual letter has comments around this. So there's a lot of information that's being disseminated through these financial institutions around what this technology is doing and how quickly it's changing commerce and transactions. And thank you so much for taking the time. We're very excited about what we're doing. Questions? Brendan.
You said this will be launched by the end of Q1, which has 27 days left in it. So this will be launched in the next 27 days. Is that what you just said?
March 30th.
Outstanding. Wonderful. It's news to me. Can you, for my benefit, I need to hear it about 300 times to get it straight. Can you tell us in a sentence or two or three, if must, what I can do with a stable coin that I can't do with a dollar, or what I can do faster and better with a stable coin that I can't do with a dollar, or can't do as quickly with a dollar, with the acronyms kept to the minimum for Charlie's benefit?
Yeah. So, yeah, that's a great one. So some of the today use cases that we're seeing are based on remittance corridors. So people sending money abroad, and essentially people.
All right, calling a timeout there. Remittance corridors is the same as an acronym. Okay. Don't know what that is.
Yeah.
Help me out here.
So 1 in 5 Canadians sends money abroad, right? And that's a real stat. A lot of the challenger banks have built their entire banking infrastructure around having Canadian to Pakistan transfers really ironed out. So that's the majority of their business. These transfers take time, are complicated, are costly for the retail individual, but they're also complicated for the financial institution. Stablecoin solves all of that. You can send money abroad within a second, within a penny. You no longer need to use Wise or Revolut or any of these companies. You no longer have to go to your bank and fill out a little form and say, hey, I want to send a wire. Okay, we're going to charge you $50. And then you don't know where the money is for 7 days. And when it lands on the other side, there's been another $100 that's been taken on the other side, right? This is very quickly solving that problem specifically. Now, where it gets really interesting is from a treasury management perspective. Let's say you provide credit cards, you're a challenger bank. You need to post collateral to Visa or MasterCard constantly. 9 to 5 during the week, that works. On the weekend, on holiday weekend, during holiday periods, you have to extend your treasury into them to cover what your retail users will spend. Visa has enabled stablecoins for companies to be able to programmatically settle multiple times a day so they don't have to extend their balance sheet. So the businesses are also really interested about this because they're essentially maximizing their treasury use and not exposing as much capital now. So those are two real use cases today. Now the fun stuff, agentic commerce, the other thing, we're working with funds that are talking about money market funds that are tokenized. How are you going to settle a token fund? You're going to need a stable coin to settle it, right? So as market structure changes, more use cases are going to come to the forefront. But to be very clear, I'm not telling everybody that you're going to go to Starbucks tomorrow morning and you're going to pay to a stable coin. The more advanced product or interesting product is the stable coin is doing the payment in the background and you don't even know. And that's really where this technology becomes useful.
Can you elaborate on the collateral that comforts people that the stablecoin will maintain its value?
Great question. So Canada's in a little bit of interesting place because while we have the outline of a stablecoin act, we don't have the details of that act. Meaning, and one of the portion of that is how will reserves essentially be allocated and controlled and governed. Tetra has been working with finance at the federal level, essentially to put up a plan as to what we think would be, the appropriate guidelines around a reserve. That plan is educated by some of the other frameworks globally, including Genius. But two things are important. One, for every stable coin in circulation, you need $1 back, right? Two, that dollar needs to be liquid. So liquid, what do we mean by that, is invested within a 90-day framework for a tool. So we're looking at deposits, we're looking at GICs that are within 30 to 90 days, and we're looking at money market funds. Essentially, we need to be able to guarantee that if you're coming in and asking for that dollar back, we can give it to you. And there's an investment framework around that. And then I would say above and beyond, what you want to do, at least at the beginning, and that's very much Tetra's intent, is to be over-reserved. The control piece is also important. So every month you publish public attestations from an auditor, right? So the public will be able to see what we have in reserve, what we have in circulation. The auditors will be doing spot checks. And then what's really great about Tetra is like our technology tool, Unity, allows people go on our tool and see the reserving any time of day, anytime. Because we're tracking all of what's happening on chain, and our partner banks have provided API access so we can essentially see what's happening at the bank level as well. So there will be multiple layers of transparency that are provided, but ultimately what's going to matter is all of that is set into the regulation and law by which we need to operate. Yes?
So can you hear me? So I get how this eclipses the anything but quick system, or it's anything but Swift system that we've had since 1971. But when you gave the example of fund flows to Pakistan, or if I'm thinking sending what now sounds like Venmo to my kids in America and doing it seamlessly and quickly, there's a whole FX component that's got to be layered on this because the recipient probably doesn't give a damn about Canadian dollar stablecoins. So how do you envisage going to the next level and working with real-time FX providers to get around the bank inefficiencies and bid-ask spreads that are out there? How can you make it so the recipient can get the funds quickly, as using the stablecoin, then can make the appropriate conversion into the real currency in the real accounts that they have in their jurisdiction?
Yeah. So again, great question. There are many pools today that offer conversions through decentralization of transacting platform, because I'm not using the term exchange, right? The terminology in this space would be decentralized exchange, but the reality is they're liquidity pools, which you can swap essentially a Canadian dollar stablecoin against a US dollar stablecoin. That exists today. It's built. It's available. Companies like MasterCard have a network where you can flow in a Canadian dollar stablecoin and they will flow out whatever currency stablecoin that you want. That exists today. It's built. Stripe through Bridge has something similar. So that problem's been solved. Now, we can argue about like depths of liquidity, right? And how much you can actually get executed in these pools. But as the technology grows, adoption grows, these pools of liquidity are also going to grow. But it's essentially on-chain swaps. You don't need an FX desk anymore. You don't need a bank that's doing FX markets for you anymore. The technology is doing it for you. Sorry? Yeah, it's the cost of doing an on-chain transaction. Yeah, so it's like a penny.
Thanks. One of the premises of crypto was that it was pan-national. What is the attraction for having sovereign aspect to the stable coin?
Yeah, Great, good question. So my background is in public equities, but also foreign exchange. Some high level statistics, right? So in the foreign exchange space, Canada is about 6% of the flow, right? We're about 2% of global GDP, but we're 6% of FX flows, and we're about 5 to 6% of reserve assets globally. Why? We're a trusted currency. We're a stable government, right? What's happening on chain or on the blockchains is that there's US dollar dominance. So 99% of everything that's happening at the transactional level right now is USD denominated, right? So that's a problem generally for everybody, not just for us, right? It's like because they're feeding their treasury, they're feeding, their balances. But what really irks me is that Canadian companies are deploying this technology using US dollars. So we are now not competitive as a country. Because I can tell you some of our partners that have been announced as part of this round, the reason why they want this to happen is because they all have proof of concepts that they're running with their partners using USDC. And if we don't have a product that's competitive, then the flow of money is going to evolve away from the Canadian dollar into US dollar, right? So we should care about this we want to maintain sovereign rails, but we also want the deposit base to stay within Canada so we can feed into government bonds and things of that nature. And I'll give you a great example. There's a crypto trading platform that's American owned that's offering Canadians 4.5% to store USDC on their platform. It's now more competitive for Canadian to put money into a US stablecoin than it is to keep it in a bank account, right? We should care about these things. So the sovereignty piece is important, but also we are slowly losing control of the velocity of the Canadian dollar in global commerce by not having a product of this nature out. I'm also flashing red.
Can you speak to your relationship with other Urbana portfolio companies?
Yeah, of course. So, I would say we have great relationships with all the companies. We've been working with Richard's team since I want to say day one of me joining Tetra. Raj, which will be up recently in the next few weeks, next few minutes. Apologies. We've also been talking to Evolve for quite some time. I've had multiple engagements with Jordan and Max trying to figure out ways for us to collaborate. They're really advanced on the technology side, so it's really interesting. So yeah, we continue to try to partner as much as possible with the companies at the forefront, and I think with all the exciting stuff, if I may, on the CNSX portfolio, as well as market structure evolves over time, there's going to be a real opportunity to deploy this technology for them as well.
Congrats on the launch, or soon-to-be launch of the sovereign and much-needed sovereign digital currency. Question on the sovereign piece: is there any discussions around the chains that you will use, as they're not sovereign, right, and therefore decentralized? So, what are the discussions being had then around a sovereign chain?
I can tell you've been reading John Ruffalo's LinkedIn posts. I don't necessarily understand why Canada wants to reinvent the internet. That would be my positioning. But I think the concept of wanting national champions and owning more of the infrastructure layer is important. That being said, the nature of the blockchains and why they make them successful is because they're highly decentralized and cannot be controlled by any specific country or entity. Now, we are an institutional grade provider, which means that we will gravitate towards institutional grade layer ones or blockchains to start. And that's just a volume perspective. So that's Ethereum, that's Solana. We have no interest in touching products that do not meet the AML KYC requirements of how we operate. And I can give you two platforms that do a lot of volumes that we have no intent of touching, the Binance chain and Tron, right? Just because of governance and how they work. So there's a little bit of science and art around these decisions of where we're going to launch. But I am not in the camp that Canada should build their own layer one for a variety of reasons. I think I'm at time. Last question. Okay.
In terms of this U.S. firm that can pay Canadians 4.5% on their overnight cash, how can they afford to do that, and how can you compete to keep the capital here?
Good question. How they can, I mean, they have big marketing budgets, I guess, is what I would tell you. But they're also partnered with one of the issuers, so specifically Circle. So Circle incentivizes basically that firm through rebates and yield sharing so they can offer that yield back to the retail user, right? So there's a construct around the partnership that allows that to flow back. And by the way, both these companies are public, so you can audit all of that activity if you would like. In terms of competing, I mean, that's really a question that's going to go to our partners that are going to be offering this token to retail users versus ourselves. Because our intent is to be the institutional issuer, not the retail platform front end at which people store this on. So I'm not offering anybody yield, if that makes sense, right? And also I would have to specify that in the Stablecoin Act, there's very much a section around yield and rewards, and how that is going to evolve is still yet to be determined for Canada.
Just if I could jump in, when you start offering yield and competition for yield in stablecoin, it invites every manner of skullduggery. Instead of owning, for example, a stablecoin is backed by, say, Didier, if I may say a Government of Canada Treasury bill or whatever. You're locked. But as soon as you have to reach for yield, you're going to start doing derivatives. You're going to start doing all kinds of stuff, and that's could be the Achilles heel of stablecoin, because you need a guy like Bankman-Fried or somebody blowing up because he's done so many structuring products around it for yield. That's where the blow-up can occur. When you get, what's the British phrase, too clever by half. Just a thought. Sorry, Didier.
No, it's all good. Thank you very much for your time.